How's it going, everybody? My name is Antonio, and this is the last one of the face-to-face interviews that I had in London. This is actually one where I spoke to all three of the gentlemen that I had spoken to before, as all three of them run natural resource companies for different commodities. I wanted to see what they think about the alleged commodity supercycle that is, so talked about, but doesn't quite feel like it's a supercycle at this point. So that was the main point of the discussion, and I also wanted to get their opinion on what commodity they think will outperform in this cycle. So not much of an intro, but a good conversation nonetheless. Let's play the clip. We're here to talk about a potential commodity super cycle. Do you think that's just a catchphrase to get people's dollars into commodities, or do you think there's reality to it? Are we in a super cycle?
I'll take a stab at that. We're not in it yet, but I see it on the horizon. The only question is, when is it going to occur? I don't think anybody truly knows the answer. I think if you're a believer in the electrification of everything story, and the fact that we're going to have to transition away from burning fossil fuels, while maintaining and in fact exceeding our quality of life, not just on the unit basis, but for more units, more people, as now we're 8 billion people. The amount of metals that will be required to supplant the burning of carbon is simply not available, not even in the pipeline. And so it's really, I've said before that I think it's an opportunity that's bigger than the Industrial Revolution in terms of economic impact. And so it's my thesis, and part of the Ore Group's thesis, is to invest in these commodities at the stage which we have expertise in, which is in the exploration and discovery of them, and put ourselves in front of this super cycle that's coming. And I think that, and again, I'll emphasize, I don't know when it's coming, but I mean, all three of us here are relatively young CEOs, and so there's just no question that at some point in our career we're all going to benefit from that, if we put ourselves in front of the game. And then if we're in business, I guess I said, you have to sort of have the capital to be there, so that's important. But yeah, it's coming, and I think it's going to be huge.
Oh, look at the facts of what happened too, though. You had electric vehicles come around the same time as solar and wind. Renewable energy is making a really big push, and battery support. Both of those all came on in the last 10 years, really making a hard push. And yeah, the metals that are required for both of those. And you've got all these, the governments that are coming online too and saying, we need to do this, we need to do this, we need to do this. But yeah, it's the electrification of everything, and that's no way to do it without metals.
Supercycle is a pretty broad term. And what commodity are you talking about? Like, look at copper, for example. You can argue we've been part of a super cycle for a long time. I guess the big question is, when's the next lift? And take copper, for example. American Eagle Gold's focus on copper. It was around 60, 70 cents in the mid 90s. So, 25 years, 600, 700% gain in the metal. It's pretty good. So when's that next 700% gain going to happen? When do we go from $3.50 to over $20? I think that's the big question. But if you look at the price of cars, they haven't gone up 700% in the last 25 years. Copper has, so it's been a pretty good lift, and we're waiting for the next big one.
And I don't think, if I can add, the super cycle probably is a misnomer, in the sense that it sort of assumes that it's just going to go, all things are going to go up in a linear fashion. That's not how it's going to work. There's many subcycles within it. So, lithium will behave different than copper, then will behave different than uranium. And gold the same. Gold is, unique in that sense. And then there will be, many ebbs and flows as a whole. So, I do think that, but as a general trend, over, call it a decade, decade and a half, maybe longer, there's no question that is on the horizon.
That's pretty much what I wanted to also note and also talk about, is that a super cycle is not a thing that, it starts today and then over the next 10 years, every commodity is up 10,000%. It moves differently. Like, for example, the super cycle of the 1900s, it was that's also something that we're going to touch upon later on today, but there's a story behind it. It was the Industrial Revolution. So you saw, it starts differently in terms of you're going to need cement first and copper to build bridges and streets and stuff like that. And then the other metals are going to kick on, and then technology is going to come in. So you're going to need tin, silver, a little bit for the chips and all these things. So they maybe oil and copper and iron ore or whatever can have a big push at the beginning, but then the little metals are going to have really big runs at the end, because everybody's going to be freaking out about, we have all this supply of copper, but now we've got no tin to make the chips to make this, work. So how do you think this super cycle, if it is, what would it look like? Because we have most of the roads around the world, besides if it's a Africa maybe driven super cycle, that could be a thing. How do you think it's going to look like? Which metals are going to move first, and which metals are going to move later?
It's driven by electrification of the world. Your next big pipeline is your copper. How do you get the electricity from point A to point B? The world's going that direction, and I think the prices are going to eventually catch up. And in terms of super cycle, I selfishly want copper to go up more than everything else, because guess what? If the price of iron ore and everything goes up, well, it costs more money to build those mines, etc. So,
and I wouldn't discount the infrastructure itself, we call traditional infrastructure, which is crumbling, and I wouldn't discount the United States. And I think the past 30 years, China and call it the East have been developing world-class infrastructure, high-speed trains, bridges, roads, airports, all this other stuff, roads, condos. Whereas I would suggest that the West has been very much delayed, probably a generation or two behind in terms of that infrastructure, which is crumbling. And I think, we're really starting to see a divergence in terms of, globalization is falling apart. Now, whether it falls apart, completely, I doubt it, but certainly things are changing. We can see the divergence between, the West and China, and, Russia in that camp too. And so I think that's going to spur a lot of local investment. We're going to have to really compete with China now in terms of that infrastructure. So don't bet against the United States. It's something Warren Buffett always says, and I agree with. They're a very resilient and innovative economy and society as a whole. And then they need to build those bridges, and think of the infrastructure, the interstate, the trains, and in Canada the same, although we're not as progressive on that front. But I think that also is going to spur a lot of local development, and particularly if it is going to be United States at the forefront, which I absolutely think it will be. They're going to want to, again, going with the deglobalization theme, or more of a mercantilism theme, having assets in Canada, which is where our focus is really going to be. Priced at a premium, we think.
I'm also wondering how sustainable this narrative might be, because this was one of the questions that I wanted to ask. We already answered it. What is the topic going to be of this super cycle? Every of the previous ones has had a topic. It was the Industrial Revolution. It's been different things. The last one from the 2000s was sort of the China growth story. China, super growth story of China. Are we still going to have that? We have population decline in some places, besides Africa, I guess most of the places have population decline. So, but then you say it's the electrification of things, but we've had solar panels, wind energy, electric cars for hundreds. The electric car was founded around the time that the internal combustion engine was founded. So how sustainable is this thing going to be in a higher interest rate environment? Because there was a lot of speculation that these things only came up because there was free money all over the place. So how sustainable is that source of demand for commodities?
Very, very sustainable. Again, it's government policy driven, which is, it's not companies trying to make a go of it. These are being mandated from the top dogs of your countries and your European unions. This is basically the path forward that's been laid out. There's no alternative to it. At least that's what people are trying to say and really trying to commit to.
It's very likely that we'll go backwards. I mean, I think the electrification of everything is coming. It's a question of how quickly. You referenced the electric car. All this technology has been around for a while, but it's been uneconomic. They've been toys, perks. Now, I'm not totally familiar with the true relative valuation of a Camry that's internal combustion versus electrification, but let's just suppose that they're about the same. The second it becomes 10% cheaper on the front line, it's game over. And part of that has to do with development of technology and lowering the cost of the batteries, which I think is the biggest single input. But also, as James says, it's the mandates. So it's just not straight free market economics. It's the government taxing oil to the point where it doesn't that sort of gives it that lift, which we're seeing. I'm not a fan of, because I don't like government intervention, just because I think there's always unintended consequences to that sort of thing. But nonetheless, that's all part of it, and why I just don't think that there's going to be a reversal of that trend at all.
You bring up a good point there. The batteries is the big key. They've had electric car, they've had solar panels and stuff, but there's nowhere to store that energy. It's great to have an electric car, but if you can only go 10 kilometers with it, it's worth nothing. You know, the last 5-10 years now we can go 500, 600 kilometers with a Tesla. That's the big game changer. And be able to store those solar power energy, that's the big game changer. And that's really kind of been new in the last couple of years.
But it's all required too, though, because population, even though population is declining now, it overall is continuing to grow, and everybody needs electricity. And nowadays, everyone carries a cell phone. That's electricity. Everyone has electric toothbrushes. You can't even roll down your own windows anymore. You have to push a button to roll your windows down. Everything is electric, and that trend is not going anywhere. It's just it's increasing. Scientists, manufacturers, they're innovating more technologies to be more electric. That will not stop at any point. It will continue to grow.
The other really big theme is ESG. And why that's a big theme is that it's one thing wanting ESG. So you want your mine in Indonesia or wherever to follow certain protocols. But in the end, you want that production of those metals to be in the country where you have a proper watchdog to make sure things are okay. You can't just close your eyes, hope these guys do things properly overseas, because they don't do it properly. You go to China, you go to Indonesia. We all share one world, one ozone. So you really want to be producing those metals in Canada, in the US, in Australia, in Europe, so you can be watchful over it. And once you are doing that, and once you take away the production of nickel away from Indonesia, copper away from China, gold away from China, and now you can only produce in Canada, then also you start seeing a price differential for our assets versus the others. And once you start seeing that big separation of prices, that's a real big game changer, I believe. And I believe a lot of these big companies, they're going to be required to get their metals from their own country. Look at Tesla, look at those automobile companies. It's just about to come.
Yeah, there's no question. I see a premium, a future premium baked into the price of copper. If you can, show its provenance, it's produced in Quebec or it's produced in British Columbia, or if uranium is produced in Saskatchewan versus Kazakhstan, there's going to be a social charge, a social premium associated with that. So we don't see it yet, but I think that's inevitable if, the world continues on this sort of accountability ESG theme, which again, like electrification, I don't think that's going anywhere.
We have seen it before though, with diamonds. I think diamonds really good point. Set things apart, and they said that Canada started branding their diamonds, that if you had the Canadian logo, then you knew it was sourced from a justifiable jurisdiction in Canada, and that it wasn't child labor from South Africa or anywhere like that. So can the same thing happen with other commodities? I don't see why not, to be honest.
Sure, that's that sanctioning mentality, but also self-sanctioning, sanctioning of the consumer, if you will, in this case with the diamonds, but also what we're seeing in the uranium market. Some utilities were self-sanctioning Russia, saying, "Oh, we don't want that uranium. We're not going to buy it," even though there's no sanction on uranium in the U.S. There was a loophole for Canada, so no real sanctioning on Russian uranium, but self-sanctioning might also become a thing in this bifurcation. That's what they call it. That's sort of the bifurcation of the uranium market. It also plays an important role, I think, in the story. But what about other commodities? Because I'm thinking to bring on all this production online, we're going to need oil. We're going to need to burn a lot more fossil fuels for a lot longer. Like, I don't think they're going anywhere. At least based on what I'm seeing. So that's kind of an obvious thing. Copper is an obvious thing. But what about stuff like diamonds and gold? I mean, if we go into a growth story, electrification or whatever, gold is a metal that does well in terms of panic and stuff. Excuse me. But what's going to happen to those metals that don't really have a function like copper, like oil, and the other commodities?
Gold's been used and demanded for the last 5,000 years. That's not changing. And in terms of an investment, gold's probably one of the safer ones to make, because you have a pretty hard floor in terms of what your all-sustaining costs are, and those are pretty transparent across the board. So I believe the all-sustaining cost, when you count everything exploration, it's about $1,600 US. So once you go below that $1,600 US, you're going to start seeing mines shut down, and it'll cause the price of gold to go back up. So in terms of investment of just in a commodity, like gold's pretty good long term. And what you saw from 2000, I believe it was 2011 to 2020, you saw sideways price action of about $1,532. Or maybe it was 1350, but from there you saw all of a sudden the jump. And right now, what you're seeing is kind of a sideways price action from around $1,700. And I believe in the next couple of years, you're going to see another big jump. But gold demand is not going anywhere. People love it. It's a good protection against inflation.
Yeah, I don't see gold as not having any utility. I think it has the ultimate utility. It's a currency. It's not a commodity. And so, to suggest that it's has no value is to ignore 5,000 years, probably more, of utility amongst humans. And so, just like I don't need copper either, just like I don't need gold, but I want it, and I want, on an ounce for ounce basis, I want that ounce of gold more than I want copper, because it just has a more transferable value associated with it. And I do think while gold has, a lot of people are questioning gold because of how it's behaved with inflation and whatnot, and that's rightfully so. But I just think there's been so much distortion through quantitative easing, which goes back to 2008. It's been exacerbated by other, like COVID. They just sort of really cranked it up there. So it's literally helicopter money. I mean, that's what I was talking about Bernanke. That's what we saw. They didn't call it that, but that's what it was. Anybody who was like, stay at home, here's money. And they just had such a distortion of the market. So I just don't think that, the fundamentals are clear, because it's been, you've had crypto come in there and just all these sorts of weird things have happened. So I don't really think we're seeing true price discovery.
And add diamonds, I'm not going to profess to know much about diamonds, but I think it's an insult to gold to even put diamonds in the same row. And I'll give you a really quick example. If I buy an ounce of gold, I can sell it the next day for probably 99% of what I bought it for the day before, assuming the price is the same. If I buy a diamond, my buddy proposed to someone, she said no, and he bought a diamond from someone. He couldn't even get half the value for that diamond the next day. So it kind of just goes to show you the difference between diamonds and gold. And I think gold has a lot more of a future than diamonds do, especially if you take the fact that you can now make homemade diamonds that you can't really tell the difference between something that's made in a lab and something that's actually found in the
Are you making homemade diamonds?
I'm not.
Show me that recipe.
You need to watch your back in London. There's companies presenting about diamonds here. So no, it is I get what you're saying. I want to make a choose between your favorite child, because you guys, the org group is involved in different metals, different materials, and maybe we can go left to right, my left to right, to just if you had to pick one metal to play this commodity super cycle, which one would it be, and why?
I can give a really boring answer. I'm not going to pick one. We're part of the group. We picked metals that we believe are going to be strong long term. They have good fundamentals behind them. And for me to pick one metal would be like me and my portfolio just picking one stock. You have to diversify, I believe. So I think each of these metals is very good long term. Copper, electrifying the world. Nickel for storage. Uranium's going to power everything. And gold, we just went over why gold's so good. So I didn't give a boring answer and not pick anything. I'll let James or Steve do that.
Well, I'll second Tony's comment. Yeah, it's everything's good, but I'll go out and say uranium for sure. But that's because I'm a uranium bull.
It's in this guy's blood.
Literally in my blood. So I will definitely think uranium is going to be one of the best.
I mean, his email is uranium geologist, so yeah. I think he's got a favorite.
Live it, eat it, breathe it.
Like 20,000 calories a gram though to eat it. So
that's the least of your problems if you get it. Yeah, I mean, the whole reason or group, well, not the whole reason, but or group has purposefully created a diversified basket of commodities that we've selected very carefully in order to be able to survive, the ebbs and the flows of the respective commodities within that. It's very unlikely that we'll have, 4 or 5 commodities that we focus on. It's very unlikely that all 4 commodities will be banging on all cylinders at any one time. And so it's nice to have that balance. So my favorite company is like what's drilling, because that's my favorite, because I want to see that's what it all comes down to. The secret of our success will be to never stop drilling. So that's, sort of how I, pick the flavor du jour. But I will go out on a limb. I'll say that, I think if I had to pick one, it's gold. I mean, that's what got me into the industry. I am a big, macroeconomics student. And while I don't think gold is, you don't invest in gold to get rich, I think it's a good hedge. I have a distrust of the current regime and how much money they are printing, and with no end in sight, and the amount of debt that's out there. I just feel if I had to own one commodity, probably don't want to own uranium, no offense. And copper, there's not much I can do with it. But if it hits the fan, and I hope it never does, but it's on the table that one day it will, I want gold.
You can store it in your house. Where you store that copper.
I don't have any gold in my house. Don't come to my house.
But it's a good point that you're making on uranium, though, because we have, and it's also the second topic that I wanted to go to is how do super cycles perform in times of war? We had a super cycle, 60s, 70s, that was arguably after the biggest war in Europe until now, and that would have fueled it, according to some people. But we are in a war right now. One of the biggest issues that I see there could be a nuclear accident happening with Zaporizhia, one of the other power plants that are being occupied. Whoever attacks it, what happens, that's politics. I don't want to get into that. But what if it does? Because if you put all your money into the uranium basket, that happens, it's not going anywhere. There was even an argument that I read on Twitter, so I don't remember who made it, but shout out to whoever made it, saying that there's no institutional money in uranium for that reason. I mean, if you're investing $150 million, are you going to put it on something that you can wake up tomorrow, there's a nuclear accident, and all these stocks are gone? So how do you see that?
Is there no institutional money in uranium?
Yeah, there is.
Yeah, there is.
Plenty. We got lots of institutional shareholders.
And the whole Sprott.
But maybe like Fidelity. I mean, maybe the super big boys.
I think that's what they mean. Yeah,
BlackRocks of the world. But we got lots of institutional shareholders.
Yeah, I'm gonna sell Baselode when it lists on the New York Stock Exchange. So
I like that.
The thing that you kind of just described, though, that's not really an accident. If a plant gets shelled during the war, that's not nuclear energy's fault. Not one little bit. Is it any more disastrous than having an oil derrick spring oil in the middle of the ocean? It's one of these things that, yes, with every technology out there, there's always pros, there's always cons. There's going to get, some people are going to love some things for one reason, other people are going to hate it for another reason. It still proves to be the safest form of energy, and that supplies 24/7, 365 days baseload energy source.
I would suggest the safest and the cleanest too.
Absolutely.
Which it gets a bad rap for because of nuclear waste. When you think about its footprint relative to, call it a hydroelectrical dam. Hydroelectrical dams also pose the danger. I mean, what if a dam fails? What are you going to short water? But think about, that area has been flooded, huge areas. I mean, there's all sorts of controversies, particularly in BC. And there's trade-offs to anything, right? So it's about weighing the pros and the cons. And when you strip out the misinformation and you realize that, basically, nobody has been killed in a generation from nuclear energy production. Yeah. I don't think, to my knowledge, nobody's been killed from nuclear waste. Got to treat carefully, of course. But we know how to do that. So, relative to the effluent from burning fossil fuels that goes out there that kills, I don't know what facts I believe, but let's just say thousands of people die from the effluent effects of carbon and pollution. That just doesn't, that's just a way of life. And so people are, sort of accustomed to it. So, I think nuclear is rational, but people behave irrationally all the time.
They fear that a lot of people seem to fear nuclear energy more than anything else. It's misunderstood. But I think because of the impacts that could happen, everyone always relates to Chernobyl, say, in the nuclear industry. You don't want another Chernobyl to happen, and really they haven't. Chernobyl was a flawed design, hasn't happened since. How many other reactors have melted down? Fukushima was in a terrible location. It doesn't matter what was there. If you had an oil and gas plant there and tsunami came in, goodbye. Coal plant, that would have destroyed everything. It was just a poor place. So if something does happen in a war and nuclear plants get shelled, yes, I think it'll have a very negative impact. But long term, I don't think it would damage nuclear's reputation all that much.
Well, I tend to agree. Yeah, in the short term, obviously that's bad news for the uranium industry. But I think it would bounce back a lot quicker than Fukushima because now like a lot faster. Okay, and because now the whole narrative is about getting away from carbon, burning carbon, and so if you're truly going to eliminate carbon, which I agree, it's not going anywhere completely for a long time. But there's really no, you cannot operate our way of life on wind and solar, period. No. So, it's impossible. Either we all go and, live in caves in the dark, or we go back and we start burning coal again, which is what's, happening. We're burning more coal than ever. Or it's nuclear. So, I mean, there's just, unless there's some other revolutionary technology, then that's the math.
So you're saying that the risk of a nuclear accident to date is lower than what it was during the cycle of the during the last but smaller cycle in 2011?
I wasn't suggesting the risk of the accident itself. No, but like the risk to the downside of the market, to the beta of the market. Yeah, I think it is now. Sort of short term, I can't forecast that, but it would bounce back quicker because I think the narrative around uranium, like, smart people are talking about it, and sort of back then we didn't really care about turning off the carbon, right? Just like, so we just burn lots of coal, we turn off the nuke plants. Well, in Japan imports more gas, but now that's not sort of accepted. It's not part of the master plan, and so they're going to need it. It's going to be a requirement. It's not going to be an option. It's going to be a requirement if we are to truly get off, or at least head in the direction to get off carbon.
Let me ask a question really quick for James. How much are the lobbyists involved in oil and gas trying to keep the price of uranium down? Like, are lobbyists involved?
I honestly don't know.
They were famous for doing that back in the 70s. Like, that's why they say like 3 Mile Island was up. Like, I don't think anybody, in fact, I'm quite certain nobody died from 3 Mile Island. And the oil companies, and this was what, in the 70s, and I think, and it's if you go into the pits of the internet, you'll read about how there was the oil lobbies utilize that quite heavily to suppress the benefits of uranium, because who's got the most to lose? And those guys are awfully powerful. So is that a conspiracy theory? Maybe. Is there truth to it? Yeah, probably.
Look at the conspiracy theories, though. Conspiracy theories 15 years ago, how many of those are not conspiracy theories? They're just everyday things now. So I wouldn't be surprised if it came on, because these disasters were really media disasters. Fukushima was not a great thing to happen. One person died out of lung cancer. They were a lifelong smoker too. So I mean, okay, but one person out of one of the worst disasters that we've ever had, and the media blew that out of proportion. So is the media in one way or another sponsored via different ventures to do the oil and gas money? Sure, I wouldn't be surprised if in 15 years that came out and it was like the normal thing and everybody believed it. Right now, you're going to get called conspiracy theorists for it. So. I do agree. I do agree with that. I do agree also with what you said about the uranium thesis. Do you guys have any plans about getting into other metals? Is it something else that's interesting on your radar? Because what do you have now? You got nickel, copper, uranium, gold. Is that it?
I believe you covered the gamut there, but we're always sniffing around for new opportunities. James has good intellectual property. I won't speak on his behalf, but he knows rare earths quite well. He's got an interest in lithium as well. But I mean, look, I'll speak for myself. I've got an interest in anything that makes sense. I've got that I see a market for, a long-term market, not sort of a flavor du jour. I also try and stay away from things that are historically have been able to be cornered by, say, the Chinese. If they control something, I get very cautious about that, because you can spend $200 million developing something, and then when you come to a production decision, they flood the market and you're done. I think that, though, and that's something like rare earth, for example. That's always been the knock on rare earths, because they control it. However, I do think that the China factor is going to be mitigated to some degree, because I think that call it the Western governments are going to support that, or somehow try to eliminate that. We need to produce our own rare earths. So I think there's going to be, I think that the Chinese ability to corner those markets are going to be limited to a degree.
they've got such an advance and such a jump start on that whole industry, though. It's going to take a while for the Western world to catch up. But yeah, I would have said rare earths as my go-to, simply because I've seen what they've done for the future. We live in this technological world because of rare earths. I don't think a lot of people realize the benefit that we have. These lights that you have, rare earths, or cell phones, rare earths, a lot of technology nowadays, your computer, everything has rare earths. And it's not just one element, it's 17 elements. So it's a suite of them, and they've all got different applications. And sometimes the application is there at the time when they're being mined. Sometimes the things like lanthanum and cerium, there's no real value for them right now, and they've been flooded. But what's happening over in China is because they have all of this lanthanum and cerium in warehouses type of idea. Like, it's basically a reject, it's a waste, that they're looking for new applications to use those elements in new technologies that are going to be emerging. So even I think it's cerium batteries are being looked at now. So now you're going to have rare earth batteries. Just these things, they're called the seeds of technology for a reason. They help us advance, and so they will continue to be diversified and improved in new forms of technology. And I don't think there's too many other elements that have the same functionality or diversity in what they can do. So that's why I put rare earths up there quite a bit.
Look, you don't want to come out with a movie. You don't have a movie where you come up with the title first. You want to have a script. And I think if there's a great asset, it really doesn't matter what the element is. If you have a great asset with great potential, with good targets, we'll really consider anything. And it doesn't really matter what a price of a metal is if the asset's good enough and the grade's good enough. I think the one thing we probably will, avoid is going to jurisdictions that we don't understand and don't know, as opposed to getting into metals that we don't know. Because if it's a great asset, and if it's in Canada, like, we're willing to learn about it. But in terms of us going to DRC or Russia or Indonesia, that's just not what the ore group does, and we're not going to do it. And I think I mentioned that to you earlier, but all metals really are on the table if there's a good enough asset.
That's a good, and I agree. And I was going to say that it's not like we feel pressure to go into another commodity just to gain exposure to it. I do feel that we have a fairly diversified portfolio, and I'm just as happy getting into another nickel asset or another gold asset. Like, we like those commodities. So it's really about the project. And I think, try not to speculate on the commodity itself as much as possible. And again, just focus on the asset that, so the assets can sort of supersede those cycles. And so it's really a project driven thesis, I suppose, but it does, we do have to have a macro position on the overall viability of that commodity.
Well, I guess we are into zinc now. If you look at Alberta's.
Yeah, zinc is new, so that's sort of nascent for us. It's something we've always looked at. Zinc is not viewed as a sexy commodity. It's an important commodity. It's tough to market. And I would suggest that we wouldn't have gotten into it if it wasn't for the fact, like, we looked at a lot of ho-hum projects and we said no, because, like, you don't want a ho-hum zinc project. If you want a zinc project, it has to be really good. And so that's what we're chasing with the zinc project. We call it the GSL project up in northern Alberta. And if it's real, if the thesis is right, it's a big SEDEX deposit, so big. So we're not chasing small, we're chasing big. And so that's why we decided to take that risk with zinc.
If somebody's listening, though, they might think, like, okay, this is all positive, commodities Supercycle, it's coming regardless, let me just put all my money on this, it's going to be a safe thing. It's also fair to note that it's very probably, as you noted at the beginning, it's going to be volatile. Metals can go anywhere, but to every investment there are risks. What do you think those risks are when it comes down to the commodity sector right now?
Geology. I mean, the biggest risk on, from our seats is the geology. Is it there? Is the first question. Even if it is there, doesn't mean you can find it. So the geology, and that's why, failure is not just the norm, it's the expectation, or it should be the expectation from the promoter, but also from the investor. Never forget we are penny stocks, which, has a connotation for being high risk, because it's true. Investors don't come into us to buy a share at 10 cents to sell it at 12. They're looking to sell it at $1, and that's how, I approach anything. If I don't see, 10x for me, not as an equity investor, but as a sort of a deal former, not wasting my time. So we seek outsized returns, knowing that we're going to fail, 7, 8, 9 out of 10 times, in the hopes that, not the hopes, but the anticipation that, 1 or 2 or maybe 3, if we're going to the Hall of Fame, are a success and get those outsized returns. But, we have to expect, failure somewhere.
That's on the company level specifically when people are picking their own stocks. What about the general thesis? What can happen to destroy these theses? Like, starting tomorrow, we don't need any copper. What would that be? I mean, I can't really see that, just as I said with fossil fuels, but is it something that could destroy the commodity thesis? Is it the war? Is it inflation? Is it more QE? I don't know.
I think we have a lot bigger problems than our company. Something like that's getting destroyed. So,
well, substitute. I mean, substitute. What's a substitute for copper? It's aluminum, but it's not as good. But if copper was a victim of his own success and went to $100,000 a ton, because it had some other use or some other issue, then aluminum is the substitute. But all else equal, you take away the price distortions, the copper is a better mousetrap for what you're using it for. So, but substitution is always the risk for at the commodity level.
Yeah.
It's not an entirely huge risk. Like, a lot of substitution that happens nowadays is it is all on the OEM side of things, but a lot of times they don't do it as a full stop gag and don't pursue what they used to do and go to a new way. Sometimes they'll just use it as an interim replacement. So again, go back to the whole the rare earth magnets that are in electric vehicles. Now they're trying to get away from that, and one of the ways that they've been doing it is just sintering the magnets, so having less of the rare earth within the magnet and still trying to maximize its performance. So you're not really removing it, you are replacing
You're engineering it out.
Yeah,
just like they've done with cobalt in the batteries, right?
Yeah.
I mean, it's because it has its own issues, but yeah.
And then what's going to replace that, and eventually, like batteries, is a great example with nickel metal cobalt batteries, or nickel manganese cobalt batteries. They are the better battery, but they're being replaced with LFP right now because it's cheaper and faster to produce LFP. However, LFP is going to run into a problem down the road, and what's going to substitute for that one? It'll probably be, and NMC is not going anywhere, but there will probably be that drive back to NMC because it is just that much better of a battery.
And look at gold. Like, what's the substitute? Everyone thought it was crypto, and we saw how that turned out last year. And look, your silver's not going to replace gold. I'm not going to give my wife a silver necklace. It's always going to be gold, and pretty confident for gold, long term.
We didn't mention silver, not one time. Why is that?
I like silver. I own silver personally, but from an investment, it's hard. It's a much harder. First of all, I think it's a trade, and more than an investment. And I'm not a trader; I'm an investor. And so I think the beta to silver is so volatile; it's hard to sort of be an investor. That's one thing. The other thing is it's the vast majority of it. I don't know the numbers, but the vast majority of it's a byproduct. And if you want, silver, you either have to go to Cobalt, Ontario, and we're not a big fan of them. It's small systems, or Mexico, which is a jurisdiction we're just not familiar with, to sort of get silver primary stuff. So we've looked at it, we considered it. I'd love to, find a smart way to get exposure to silver, but it's not something I'm actively pursuing personally. But I think it's got a place. It's obviously it's great as an industrial metal, but it's also got monetary value, and it's better. It's almost better monetary for many reasons. I think gold's better because it's indestructible, doesn't tarnish. But really, when it comes to practicalities, you can't pay for a loaf of bread with gold.
And Steve touched on that. Like, if you want silver, BHP, Rio, they have it as byproducts, and the really big mines are in Guatemala, which you don't really want to go to. So not safe jurisdictions. And in the end, what our group wants to do, if we want to hit those home runs, the grand slams, it's not just finding a deposit, it's finding a huge deposit. And those big silver mines, they just don't really exist.
A huge deposit with positive margins.
In the end, you want to create a liquidity event for your shareholders. And the only way you can have a liquidity event is you're going to get someone else to buy you. And these days, if people want to spend the time and effort to build a mine, they want to build a big one. And use gold, for example. Like, good luck even having 1.5 million ounce deposit and doing something with it. It really has to be at least 5 million ounces. So
Yeah, I hear you. I hear you there. But when it comes down to, you guys are boring. It comes down to the margin. That's what it comes down to. Like the first thing, I'm kidding, of course, but it comes down to the margin of the commodity. Like which commodity is going to make you money in which setting. Some commodities are just too challenged to, like rare earths, for example, the metallurgy oftentimes, if I understand correctly, is very challenged. So that might distort your margin. And in a given part of the cycle, like if it's zinc, maybe some other costs like smelting or whatever, refining. I don't know anything about zinc, but maybe those costs are very high, and therefore the end user of the zinc doesn't want to pay the producers that much, and the price falls or something along those lines. So what it comes down to is then margin. It's a business.
100%. I mean, they always say grade is king, and I think frankly they're totally wrong. Margin, grade has nothing to do with it. Margin is king. You know, which is something that we talk about, you know, with Baselode. You know, very purposefully, James didn't chase the 20% uraniums that, you know, it's called the mega grades. I mean, we'd love to hit it, don't get us wrong, but we were looking for something different. And so we've discovered, let's just say 1%, you know, and say, oh, well, that's a Hatfield basket, that's low grade. I think it's crazy. It's high margin. It doesn't matter about grade, because you can have, you know, 20% uranium, but if it's 5 kilometers deep and it costs you effectively 25% uranium and on a cost basis to extract it, it's totally useless. And so what good is that grade? It's nothing. It's about margin. So if you can have, you know, a 1% deposit or a 1 gram of deposit of gold just, you know, near the surface, and you can dig it up, produce it, you know, cheaply, efficiently, and you can make money. I mean, that's what it is. So, you know, go on the record, grade is not king. It's all about margin. Margin is king.
That's really well demonstrated in the rare earth industry again as well, because there are two types. You've got hard rock rare earths, and you've got ionic clays. Hard rock, the unwritten rule that we had in the rare earth industry is that if you want to move a hard rock rare earth deposit forward, you need at least 2% TREO, total rare earth oxide. Whereas you look at a lot of the clay operations, they're not close to that. They have about 1,000 ppm, somewhere around there on average. And they are far more feasible to extract rare earths from those, and they're near surface. It's definitely a big difference, you know, just because those margins are you know, that much broader.
We are out of time. I could probably keep talking or asking a lot more questions. What is something that you want to close the conversation about the commodity Supercycle with? Something else that you want to add?
What was your child? What was your child that you were going to pick?
I guess I've picked wrong or jumped too quickly because my portfolio is down 40%. If I ever had to pick one, I just it is a hard thing. I'm starting to rethink my silver picks, as you mentioned, oftentimes because it's specifically silver companies that I'm in. I don't know if I really want that. I would definitely keep uranium for the time being for myself, but again, do I matter? I don't know. I don't understand most things, so I don't think that matters too much. But thanks for the question, and thank you for being here. I don't really have any other questions, so yeah, I really do appreciate you. Thanks for this room again, and it was nice speaking to you.
Our pleasure. Thank you for hosting us.
Thank you.